Good morning, everybody. Welcome to the Morning Kappa at 8 on a Wednesday. I'm here to present the Midweek Futures Traders Technical Brief. And so we are on week 1, March 2026, and it's been very, very interesting for markets. Volatility is there, and there has been a lot of momentum on some of the coverage of products that we have been highlighting. Let's move to the most popular products by traders. On this table, we see that indices especially has gotten a hit due to the war theme, which is currently in progress. And till now, we do not have any visual of how this war will end. But with all the uncertainties and also with all the concerns regarding how the war will actually become, whether it will become worse or would it end fast, that's still very much on the minds of all the traders and also investors. So from here, the products that have benefited the most would have been the crude oil, and it has spiked up due to the very fact that the Gulf of Hormuz has been shut down and ships has not been able to move through those passage. And also agriculture, it's been the one also benefiting from the whole move. As we saw, agriculture, especially for soybean and soybean oil, as well as corn, has been on a slight uptrend. And this current situation on the war has given it an extra boost, and therefore, for today, the product that we are recommending will be one from the agri segment. So for metals, gold has been the outstanding performer. Again, mainly because this is a safe haven in times of uncertainty. Silver has gone into neutral and copper to neutral. This is because that they are not precious metal. They are more on the commercial metals, and therefore they have not actually benefited so much from the current situation. So we look at palm oil. Palm oil has also been rising, right, since the war started. And this is basically tracking the soybean oil in seaboard. But as we know, palm oil after the palm oil conference has been on a slow decline, but that seems to have been addressed since the war started. On the fundamental side, we saw exports drop 21.5% in February versus January, while MSPEC has put the decline at a steeper of 25.5%. So exports has not been picking up, and during this time, whereby we have seen that demand has slowed down because most of the festive season is behind us, except for the Ramadan month and also the upcoming Raya, which may see some trickles of buying. Let's move to the commitment of traders for US indices. As mentioned in the beginning, there were a lot of volatility that has been seen. But before that has happened, the commitment of traders already saw that many of the investors have been hedging their positions in the S&P 500. And for the NASDAQ, there has been some short covering. And for the Dow futures, also there has been an increase in short positions. Also mainly because the Dow has actually risen quite a bit in recent weeks. But this has all changed, due to this new factor on the war theme. And so our highlight for the first product will be the Micro E-mini Dow Jones. And as we can see that the chart patterns are very much in a range bound. in the current couple of weeks. So the indices around the world too has been taking the cue from the performance from US, and also basically the Asian markets too, have seen sell down. Yesterday, especially, we saw even Japan and Korea getting facing the brunt of selling after all the jitters has been floating around in the marketplace. So for the E-mini Dow, we are looking for a short-term setup for negative. So pardon me, the short-term setup should be negative. Current price is 48,500, and for this to happen, we need to have a reference price of 49,300, and the potential profit price we're looking at is at 48,000, giving us a value of USD 650, and also on the loss side, potential loss will be above the 50,100, giving us a loss of minus $400. Coming to commitment of traders for oil and grains, notably, we see that corn has an increase of short positions being built up, as well as soybean. But the one that has been showing signs of more buying has actually occurred is soybean oil, and even more so at this point in time, this number may improve further in the upcoming commitment of traders report. This is because there is a biodiesel play, and also the tracking of the crude oil, which has actually spiked up a lot since this couple of days. But the product that we're going to focus on is the soybean. Currently, the soybean market has been impacted by the northern half of the Brazilian state of Mato Grosso, which has gotten too much rain and has kept farmers in the process of harvesting soybean out of the fields. Also, there is a fear of trade negotiations between US and China will be derailed due to the US and Israel strike on Iran. But I think everybody is looking forward, and kind of expect that the US and Chinese officials will still meet at the end of this month. So meeting between President Trump and President Xi will be closely watched. So for this, we have a short-term setup of a positive. Current price at 1171, and reference price on the retracement would be at 1156. And this would give us a potential profit of a 1185, and giving us US dollar value of 1450. Potential loss when things go strong, goes below the 1139, and that would give us a potential loss of 850. So that's all from me. I'll pass on to the next speaker. Thank you.
Hi, morning everyone. Welcome back to Minecraft. Thanks, Vincent. Right. So looking at the S&P 500, well, it finished slightly lower on Tuesday, dropping roughly around 0.94%, to close somewhere around 16.62 points, as investors remain rattled by the expanding conflict in the Middle East. The war theme, like what Vincent mentioned just now. While the index recovered from the much steeper early morning plunge of somewhere around 2% yesterday, which also has formed a hammer pattern right here. I think the continued fears over the Strait of Hormuz blockade and also the surging oil prices continue to weigh on the global growth and also the inflation expectation. So I think we do expect a volatile session for today's session as traders with this geopolitical risk against the upcoming US job data. But if the bullish to return, I mean, you can see that the index to propel higher towards this 6950 resistance level or higher to breach this rectangle consolidation zone pattern, right? So for the China A50 futures, well, it finished just slightly higher on Tuesday, settling near 14,724 points, but remaining largely sideways as the market's still in the wait and see mode. I think investors are holding their breath right now, holding their position for the start of China's major two-session political meetings where Beijing is expected to unveil a new economic target and a fresh five-year development plan. So I believe that the sideway may persist as traders continue to look at any early signals regarding property sector support and also new tax stimulus. So at this juncture, 14,700 residents still remain strong. For China A50 futures. All right, so we have Hong Kong trading stocks for today. Right, so we publish Minimax or stock code 100, which is an AI or a software company. So the stock is on its breakout formation and breach this 815 resistance level. So if the bullish momentum to remain steady, we can expect the price to test the next resistance at 890 Hong Kong dollar level before it climb higher to its this 965 Hong Kong dollar level. So now if the momentum to reverse, make sure to have a stop loss at 740 dollar level as it indicate a possible change of trend, which might also affect your trades. So up next we have Vista Incorporation, stock code 1860. So if you see that the stock is now eyeing bridge and climb higher after the rebound. Now if the price able to continue to maintain higher at this 12 Hong Kong dollar and 50 cent, well, it might reach $14 and second resistance is at 15 $15 and 50 cent, right? So a reverse below 11 Hong Kong dollar will open the door for a deeper correction, shifting the trend, right? So for the WTI crude oil futures will surge on Tuesday session, gaining roughly around over 5% to settle at $74.8 per barrel, hitting the highest level since I think mid or 2025, right? So the market remained in a state of high alert as the Strait of Hormuz, like what I mentioned just now, remained effectively closed, with the global insurers cancelling coverage for the vessels in the region following the weekend, war. So we do expect an extremely volatile and bullish session for today as traders continue to focus on the worsening supply shock. So we still keep our positive trading bias for now, expecting that this $75 level to be breached and the price able to reach higher at $80 level. Right, so looking at the MVM KLCI, well, I mean our local market, both KLCI and also the FKR futures finish just slightly higher, with the KLCI index gaining somewhere around 11.74 points or 0.69% to close at 1711.95 points. Well, this has snapped the 6 days losing streak as investors return to buy low bargain hunt for cheap stocks, specifically in those banking, oil and gas sector, as the foreign players is coming back. So I think expect a mix, but cautious trading session as the market tries to sustain this rebound while keeping a close eye towards the war situation. Also, if you see here, well, after a rough patch, the Bursa Malaysia um, finally saw some greens in Tuesday. Well, as I mentioned just now, Kelsa rebounded 0.69% to finish at 1711, right? So, well, it was largely supported by recovery in those financial sector, as investors pick up again, uh, for financial sector like Maybank, CIMB, Public, RHB as well, following the recent losses. So I think while the benchmark outperformed several regional peers, the broader market sentiment stay a bit patchy, with decliners still outweigh the gainers yesterday. So I think we saw some notable strength in the energy index as well, which rose somewhere around 1% as the oil prices continue to climb to supply. I mean, for the supply concern in the Middle East. So again, on the active list for yesterday, be Bumi Ramada, Velas to Dayang, still were among the most traded counters for yesterday, right? So yeah, I think in terms of day-to-day performance, most of the sector have rebounded following the recent drop. Right, so for our Malaysia trading stocks, so today we have Bursa Malaysia. So the stock is on its pending breakout formation at RM9 level on a strong volume. So with that, we expect the momentum to keep bullish and the stock able to propel higher to test the next resistance at RM9.30, followed by RM9.55 level. So if the stock to clear the RM8.75 support, this could reverse the course and trend lower below the support. Right. So next also we have Gas Malaysia. So the stock is experiencing a breakout at this RM5 level. So if the stock to remain bullish, you expect the price to reach somewhere around RM5.20 level in coming session, with a high volume as well. Second resistance is at RM5.40. And also do keep an eye at this RM4.80 level for any attempt of reversal, right? Also for the FCPO, well, it finished higher on yesterday's session, gaining RM39 to stay above, this 4,486 per ton mark, tracking the massive surge in the global crude oil prices. I think, however, the sentiment, or the market sentiment, feels still bearish, because I think the rally is purely driven by the war panic in the Middle East, while the actual demand for palm oil remain weak for the February, just like what Vincent mentioned just now. So I think I expect a volatile and indecisive movement, well, at least for today, as the high war premium from the Hermes crisis clash with the supply and demand reality. However, we still keep our negative trading bias unchanged. Well, if the price to hit the 4 to 50 hours, which is our stop loss, then we might shift our bias, right? And lastly, for the campaign, so now you can stand a chance to win Tesla or an iPhone 17 if you trade with us. So the deal is, the more you trade, the higher chance for you to win, right? So I'll stop here and pass you to the next presenter. Thanks, everyone.
Okay, good morning everyone. We have a results preview note on Gamuda today, which will be releasing their results likely on this Friday. So which is for the second quarter of FY26 year ending July. So we are expecting second quarter results to be between or earnings to be between 220 and 240 million ringgit, which translates to a year-on-year growth of between 4 and 14%. While we noted in our previous report that 60 to 70% of its outstanding order book includes projects which are still in early stages. We view that there could be some potential write-back of provisions, especially with certain projects like the Sydney Metro West project, which has reached a significant amount of progress. Aside from that, we still think Gamuda can manage to reach its target order book level of between 50 to 55 billion by end of calendar year 2026. This is likely due to a lot of its projects which it saw itself being shortlisted for. One of them is, for example, early contractor works for the Yanara Mortlake Energy Hub in Australia. Then, we've got, recently also, they were also appointed as the preferred bidder for two solar and battery energy storage system projects in Queensland. And there were also some other shortlisted railway projects down under. So that could see some potential, awards coming through within the calendar year of 2026. And, we think that, the DC space is still rather active with a lot more projects likely to be rolled out. For example, in Johor, you've got Microsoft that has started to award projects for its land in Johor. And, bear in mind that yesterday, the Australian Ministry of Infrastructure and Transport mentioned that they have issued 7 tenders related to the Australian high-speed railway project. And, we think that with Gamuda's track record in rail projects, not just in Australia, but also in Malaysia, Taiwan, and Singapore, we think that they could stand a chance to maybe win some packages from the HSR. We do not discount the possibility that Gamuda would be interested to try their luck to bid for any packages available from the Aussie HSR later on. So all in, no changes to our earnings estimates, maintained by with an unchanged target price of 6 ringgit and 26 cents. That's all from me, everyone. Thank you for dialing in today to RUB Morning Kappa at 8. We will see you tomorrow at the same time and same place. So selamat berpuasa to all Muslims. Have a great day ahead. Bye-bye.